Hello and good afternoon. I'm Holly reporting to you live from Kalkine Studios. It's lunchtime here in Sydney and you know what that means. It's time for the Bin Market Pulse. In this show, we'll take a look at the Australian share market performance, stocks that top the gainers and losers chart, and then in the final segment, we'll be focusing on the stocks that grabbed the headlines today. While Australian shares snapped a 4-session losing streak to climb as much as 0.6% by this afternoon, although worries about rising COVID-19 cases remained. Concerns about the economic growth knocked sentiment after lockdown was extended in Sydney until the end of September. The decision was taken after New South Wales reported 642 new locally acquired COVID-19 cases in the past 24 hours. The ASX 200 was currently trading 0.27% higher by lunchtime, and the index opened on a flat note and rose as much as 0.6% to reclaim psychological levels of 7,500. In the past 5 sessions, the index has declined 1.9% amid a slump in commodity prices. Investors also reacted to the corporate earnings with some big players like Sydney Airport, Cochlear, Self Wealth, PWH Holdings, Inghams Group, TPG Telecom, Stockland and Smart Group, which announced their earnings results this morning. Moving on now to the sectoral front, 10 of the 11 sectors were trading in the green zone. The consumer staples were the best performer with 1.7% in gains, followed by consumer discretionary, which rose 1%. Among others, utilities, AREIT, financials, healthcare, energy and telecom also witnessed a surge in buying activities. Bucking the trend, however, the materials sector continued to stay under stress owing to a fall in iron ore prices. The spot price of iron nosedived near 15% on Thursday amid a slump in demand for the steel-making material. Steel demand in China dropped significantly as volumes sold for the construction steel fell on weaker property and infrastructure demand outlooks, reaffirming the expectations of a tight steel production curve in the coming months. In the materials space, index heavyweight BHP Group extended the fall for the 4th straight session, falling over 4%. Now to turn our attention to the biggest gainers and losers amid the mid-market session. E-commerce player Redbubble topped the gainers list by rising 10.4% on robust earnings. Yesterday, the stock rallied over 18% after the global online marketplace reported a 58% growth in sales revenue for the financial year 21. Gross profit jumped as well 66% to $223 million. While earnings before interest, taxes, depreciation and amortization zoomed up by a massive 930% to $53 million. Some of the other notable gainers were poultry producer Inghams Group, winemaker Treasury Wine Estates, e-retailer Kogan.com and intellectual property services business IPH. On the flip side, civil and mining contractor NRW Holdings emerged as the top laggard with a 5.6% loss. And some of the other worst performers were global metal recycling firm Sims, miner Lynas Rare Earths, hearing implant maker Cochlear, and gold miner Pilbara Minerals. Now before we look at the shares that are in the news today, it's time for a short break.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Welcome back, I'm Holly and you're watching Kalkine TV live from Sydney. This is the Mid-Market Pulse. Let's now take a look at the stocks that grabbed headlines today. Shares of Sydney Airport were trading flat with marginal gains post half-yearly results. The net loss has widened to $97.4 million in the 6 months to June, compared with a year earlier, as the coronavirus pandemic-led lockdown measures impacted traffic. The revenue fell by 33% to $341.6 million, while total passenger numbers dropped 36% to 6 million. The airport operator reported a 91% decline in international passengers, which pay higher fees than local travellers, while domestic passengers slipped by 3.1% as compared to the previous corresponding period. The earnings before interest, tax, depreciation and amortization dropped as well 30% to $210.8 million as compared to the same period last year. The airport did not declare any interim dividend and said it could not give guidance due to uncertainty related to business recovery. The company has recently rejected a $22.8 billion takeover offer from a group of infrastructure investors. And shares of Cochlear tumbled over 7% after the hearing implant maker released its earnings report for the 2021 financial year. The underlying net profit rose 54% to $237 million in the fiscal 2021 compared to last year. The sales revenue grew, however, by 10% to $1.49 billion, driven by market share gains, market growth, and rescheduled surgeries from COVID-19 shutdowns. Going forward, the company expects to report 10 to 20% in growth in net profit in financial year 22, considering market growth, a continued recovery in surgery rates, investment in market growth activities, with some near-term COVID-19 impacts. And shares of Self Wealth, that runs Australia's most popular low-cost share trading platform, slipped over 1%, despite delivering a record growth in the financial year 21. The company, which currently deals in equity trading, plans to launch cryptocurrency trading in financial year 22, subject to requisite approvals. The company's revenue increased by 135% in financial year 21 to $18.4 million, driven by a 100% increase in active traders. The net loss narrowed to $0.6 million, while it generated a positive operating cash flow of $1.1 million. And the share price of engine cooling business PWR Holdings fell over 3%, even after reporting growth in profit and declaring dividends. The full-year net profit rose 28.7% to $16.8 million, while revenue jumped 20.5% to $79.2 million. It's also raised its final dividend by 50% to 6 cents a share, while it ended the year with a $19.9 million cash on hand. And poultry farmer Ingham's Group shares rose over 7% on robust earnings for the full financial year ending June 2021. The statutory profit more than doubled to $83.3 million, driven by solid poultry volumes, growth and a recovery across the majority of its key channels during the year. Total poultry sales volume rose 4.2%, while underlying earnings before interest, tax, depreciation and amortization increased as well 16.6% to $209.6 million. The company has also announced to pay total dividends of 16.5 cents per share, fully franked, up 17.9% compared to the last fiscal. And its net debt dropped by 23.7% to $240.2 million, which leaves Ingham's well positioned for future growth opportunities. And next up, shares of Perpetual Equity Investment were down 0.7% after releasing its earnings report. The company reported profit after tax of $108.4 million, while it declared a fully franked final dividend of 2.8 cents per share. The final dividend will be paid on October 20. And next up, shares of TPG Telecom, a merger of Vodafone Australia and TPG Group, released results for the 6 months ending June 30. Revenue rose 71% to $2.63 billion compared to the same period last year, while earnings before interest, tax, depreciation and amortization increased as well 67% to $886 million. The net profit after taxes dropped by 8% to $76 million, and the company's board has also declared an interim dividend of 8 cents a share. And Australian property development firm Stockland rose marginally higher following earnings reports. The company posted statutory profit of $1.1 billion for the financial year 21 against a net loss of $21 last fiscal. Funds from operations dropped 4.6% to $788 million, while net tangible assets rose 5.3% to $3.98 per security. It's also declared a distribution of 24.6 per share, up 2.1% from the last fiscal. And shares of salary packaging business Smart Group traded flat with negative bias after it released its half-year earnings report. The adjusted net profit rose 5% to $33.5 million compared to the same period last year, while revenue fell 2% to $109.4 million. The company has also announced to pay a fully franked interim dividend of 17.5 cents per share, flat on the prior half. Well, that's just about all for now in our show today, but keep watching Kalkine TV as we bring you the latest news and trading market updates live from Sydney. Holly Shields signing off.